Niraj Dalal, partner at 3A Capital Advisors, is now joining us. Niraj, good morning. Thank you so much for taking out time for us. Firstly, I wanted to know, with Sensex hitting the 30,000 mark, would you be bullish at current valuations on the market, or you think markets have peaked out in the near term?
So near term, I don't think is easy to predict here. So I'm not sure what happens in the near term. If you ask me whether we've peaked out, I don't think we've peaked out at all. I think the journey has just started. I think you can buy even now. I think the advice would have been the same when markets were maybe 3,000-4,000 points lower. I think there are structural stories at all points in time here, and as an investor, my job is to find companies that are available at valuations that suit me. So on the overall market, maybe we'll correct a little bit in the short term, but I think overall we are in a structural long-term bull market, and I don't think we should worry too much about short-term blips.
Right. So, a structural long-term bull market cannot be sustained without earnings, and earnings on an aggregate basis, especially for large-cap companies. That's not happening. Do you think FY18 will be a year where you would see that structural change in terms of earnings?
Yeah. See, that's been the hope, right? I mean, that's what the market is factoring in. So if one were to look at growth not happening, I don't think that is entirely a correct statement. So you've had sectors which have done exceedingly well, and you've had sectors which have not done well. So the aggregate earnings have not come up till now, but there were a lot of reasons for that. So if we put, so whether it was interest rates being high, or bureaucratic processes making it difficult to get approvals, or overall confidence in the community. I think all of those have been addressed or are being addressed. So the hope remains that the earnings will come. Of course, wherever earnings have not come, the stocks have been punished, and that's for you and me to see, right? I mean, so without earnings, it's difficult to sustain anything on a long-term basis. And that applies to our markets as well. So if we don't get earnings this quarter or the next, then again, we'll need to revisit our hypothesis and structure our portfolios accordingly.
Right. In terms of earnings, or what one can expect in terms of earnings growth, say if there is a hint of recovery in Q4 or maybe Q1 of the next year, do you think markets can re-rate further? Any hint of earnings growth?
So I think market already is factoring in some sort of earnings growth. I think we'll need to see what kind of earnings growth and what kind of quality of earnings are presented by the large cap companies. If you have good quality of earnings with good growth numbers, there is significant potential for some sort of a re-rating to happen over the next 6 to 12 months.
Right. Let's talk about some stocks, some names as to what you like. So you had mentioned Reliance earlier when it was around 1,050 mark. After that, a lot has changed. It's now at 1,400 levels. You still think it's a buy with the current at the current levels, considering what's happening in the telecom space?
So see, at 1,050, it was a no-brainer. It was available at 10 times earnings, with the market giving no value to telecom. I think the entire rally or whatever, which is $300 or $350, which is 30-35% on a large cap stock like Reliance, has happened because there is now visibility on the telecom front, which was the belief we had all along, that he's invested a lot of money in the business, he has a plan, and there is no way that he's not going to monetize it. So I think that part has now happened. The petchem business, the refining business was always steady, so that continues to remain steady. The telecom business was something that people had questions over. I think over the next couple of quarters, once the revenue from the telecom business comes in, I think the numbers will tell us what one needs to do. So for us, we are the caveat here is we are invested in Reliance. We believe it's a structural story over the next couple of years. with the base businesses kicking in, the capex having been done there, and the telecom business being the real changing factor over the next 6 to 12 months. So even at 1400, it is probably 15 times forward without anticipating too much of earnings from telecom. So if there is a surprise in earnings, sure, there is a lot of place in Reliance here, and one must understand that it's a stock which underperformed for 7.5 years, and when a large cap stock does that and then breaks out, it's always better to sit tight. I mean, you don't know what the upside is.
Right. As you were saying that, when a large cap stocks and, big funds would miss the rally when earnings are coming in, what happens? There suddenly can be a rush to buy the stock to go neutral or overweight from large cap funds?
So, I'm not a large cap fund. I'm not sure how they react. But it's a standard process, right? I mean, at 1050 or 1000, when I used to meet people and say that Reliance is cheap or Reliance is undervalued, people would either mock me, laugh at me, or probably tell me that there is still a long time away for telecom to be monetized or whatever. And to a certain extent, they were right. It took a year for the Reliance story to play out. So I've been holding the stock for a year and about 3 months more. So the natural instinct is, when a large cap stock rallies 30-35%, and when you don't have it in your portfolio, the next best thing to do it is to buy it, just so that you don't sound foolish. While a lot of the Indian fund managers or the foreign fund managers are a lot smarter than that, they don't buy it not to sound foolish. They buy it because they see earnings, and unfortunately, no one buys it when there is a little bit of uncertainty. Now with a lot of certainty, everybody is now factoring in the numbers, and all the brokerage houses have come out with a buy report. Whereas 3 months back, most of them had either a neutral or a hold rating. So I don't know how this works, but clearly you can see, and over the next 3 months you will see that most large funds will own a significant chunk of Reliance, which for the last 4 or 5 years they probably had neglected, and maybe rightly so.
Right. As far as Reliance is concerned, so that was about the fund flow that can be expected. What happens when, you come out of such a big capex cycle, when your profitability would still be as high as it is, and you would start to generate free cash flow? That is something which investors worldwide like?
I think that's the best phase. If you can identify the inflection point and once your capex cycle, which has been our hypothesis always, that you identify companies where the capex is done, where the integrity of the management is beyond doubt, and where you are seeing a sustainable build-up of revenue and earnings over the next few quarters. So you can be early in that process. You can be a little late also, but the fact is that those are the companies that will give you great returns over the next 12 to 18 months, because the capex is done, and the revenue and earnings will make sure that the interest of the investors is ignited. Yeah.
Right. Let's talk about DMart also. Last when we had spoken, DMart had just filed for an IPO, and there was some certain detail available about their SSG growth or their EPS. But now the listing has happened. Markets has given it a PE of 55-60 times. At such valuations, do you like that name?
Yeah, I had mentioned this last time also. I am extremely insignificant. I have learned a lot from both Rakesh ji and Radhakishan ji. I just don't feel qualified enough to comment on DMart and its valuations. Having said that, it's not cheap. Let's be honest. The stock is not cheap. So. The performance needs to keep coming the way it has kept on coming, and I have as a value investor, would I buy DMart? It's a tough call, yaar. I don't see myself buying DMart at the current price here. it's just tough. I'll have to wait for earnings to incrementally put money into DMart.
Right. Can you just talk about organized retail? It may include names like Havells, probably even Voltas. But do you think organized retail would do well, especially after DMart listing, the valuation that it has got, plus GST, which is likely to kill or reduce the unorganized market? Do you think such names would do well?
So, let's separate the questions. Because of DMart listing, something else will do well. I am not so sure about that, because DMart is a different business model. It's a great business model. It's a proven business model, and you have someone who is an icon by himself who's running the company. So, because of DMart, somebody else getting valuations, I am not so sure of that. That's not something that I would like to comment on. In general, because of GST and all, would organized retail do well? I think certainly, you will have a lot of unorganized players feeling the pinch once GST comes in, right? So the players who are established, who have the infrastructure, who are doing business over a considerable period of time, they will surely benefit. Whether that is retail, whether that is companies like Havells or companies like Voltas, which are clearly going to benefit from the heat that we are already seeing. So the triggers, in general, GST as a trigger for organized sector to do well, I think there is no question about that. For specific sectors and specific companies, I think it will depend on their business model. It will depend on how well they are able to capture market share and advance.
Right. In terms of any new sectors, any new names that you like, anything that you identified recently?
See, I think fertilizers is something that we've been looking at over the past 6 to 12 months. That's a sector that seems interesting. That's a sector where the government is doing a lot of stuff. The companies are coming out of sustained underperformance over 3-4 years. If we have a reasonable monsoon, I think that's one sector which could benefit significantly. I think the setup is there. The earnings, the valuations are cheap. So, yeah, that's one sector that I would look at.
Right. I'll just come back, Niraj. Shankara Buildcon has listed. It's 24% higher, 573. So again, one has to say it's a strong listing, 110 points higher. Again, the subscription levels did tell us, the sort of interest which is there. Look at in the first 1 minute of trading. It's just 1 minute into the IPO or listing history, 2.6 million shares traded. That's the sort of movement that you're seeing. That's the sort of trading activity which is there on Shankara Buildcon. So it's up around 24%. You will soon hear from the management. It's a new listing. It's a company which a lot of investors, had applied for. The management will be talking to us at 11:30 a.m. Niraj, you were talking about the fertilizer sector and how things have changed over there. Firstly, what are your top picks within that? And again, it's a sector which, if you go to people and you advise them to buy, they would probably be very reluctant at this point of time to put money into that sector.
So, usually when there is a little bit of uncertainty, people are skeptical about putting money. People are a lot more comfortable putting money once there is certainty, once it is proven earnings are there. But then, a part of the move has already happened by then. So, that's always the case, whether it is fertilizers or any other company. In terms of the sector, the companies that I like are Rallis, GSFC, and UPL, and not in any particular order, so it's one's a large cap, one's a small, and GSFC is for very specific reasons. It's a cheap stock. Earnings are likely to, improve going forward, and it's available at a valuation that I'm comfortable with. So, yes, having said that, I own all three of them, that's the disclaimer.
Right. Pharma is a sector that you've been tracking very closely. Names like Sun Pharma, Jubilant, Aurobindo, this is something which you have mentioned earlier. Some of them have done well, but overall pharma sector has underperformed, or it's not done as well as markets have. Do you still find value in that sector? You think things are improving on the ground?
Surely. See, I think what is important there is to see that incrementally the news flow is positive. Yes, it has taken a lot longer for things to improve. The earnings have been subdued. But, whether it is a Lupin or a Aurobindo or, Sun Pharma, these are great companies, great business models led by stellar people who have proven track records. So, yes, it takes time fixing the FDA issues. Yes, it takes a lot longer than what we had imagined. But I think, we are seeing flickers of hope. We are seeing things improve. You are seeing, FDA inspections getting resolved. You're getting, companies are trying to validate and yes, people did not take FDA inspections and that maybe as seriously as they should have. But I think that general awareness is now there across the sector. Everybody is trying to up the ante, and I think they are succeeding to a great extent. So I think the earnings have still not come. The visibility for that is something that that should happen over the next 3 to 9 months. But having said that, they were at similar levels 6 months back. They are at the same levels now. And my thesis of investing has been that if you were comfortable buying something 6 months back, you should be as comfortable buying it at the same price 6 months later. Just because prices have not moved up, or then your thesis remains the same. Yeah.
Right. Last time you had mentioned about technology pack that it's getting in the value zone. But if you just look at technology, you think incremental news flow is not positive? So firstly, rupee has appreciated quite a bit. You are having issues regarding visa, what's happening into the US. So just one should stay away till you get clarity?
I would think so, yeah. I mean, it's tough. So as I said last time, I still believe there is value in some of these large cap tech names. But having said that, very difficult to take a call and put meaningful money in the tech sector. Maybe you can start very small in the sector, because when things improve, they will. But yeah, still too many uncertainties in the sector as a whole. Yeah, so tough to make an investment call at this point. Yeah.
Niraj, thank you so much for taking out time for us. Always good to get a perspective from you. That was a view from Niraj Dalal. Still bullish on Reliance, was bullish on 1050 as well, and continue to like pharma, especially the large cap pharma companies, which have time and again proven that they can deliver numbers.